Well, thanks for tuning into Bloomberg Quint. We are live from the India Investor Summit 2018 at JPMorgan, and with me is Nicolas Aguzin. He's the chairman and CEO of JPMorgan Asia Pacific region. Joins me right now to talk about, well, really the hottest bed of action right now, which is the Asia Pacific region, well, primarily due to what Donald Trump is doing as well. But Nicolas, the scenario around the Asia Pacific region and indeed the world is a lot different from what it was 1 year ago. It would be, but I remember last year at the summit, the whole conversation was around geopolitics and what would happen there, and the strong growth that the global GDP was showing, coordinated global growth. Things have changed completely. Trade wars are now the dominant force of action. Emerging market currency weakness is right up there. What is top of mind of you as you look at the Asia Pacific region from a perspective of JP Morgan?
Okay, first of all, despite all the noise and despite all the issues around trade, around exchange rates, I mean devaluations and potential risks to some emerging markets countries, and the fact that stock prices have underperformed in emerging markets, in certain emerging markets relative to the developed markets, still the activity seems to be fairly strong. I mean, you look at growth rates in key countries, in China, in India. I mean, just last quarter we had the growth rates of over 8%. So the underlying structure of the economy still seems to be very solid. Now, when we look at our clients, they continue to be active. They're still doing lots of mergers and acquisitions. They're still issuing equity. They're still getting financing. They still have access to that. The capital markets continue to be opening. Despite the softness, we see like every day there's like some new company issuing significant amounts of debt or equity. So it's not like we're seeing that these headlines that around trade and around the economy effects is really yet having the full impact. Now, of course, I'm concerned about the fact that some of these issues that we're seeing over the last few days over a certain period will start eroding confidence, and that's what I'm more concerned rather than just the the direct impact that it may have around trade itself.
Pray tell me, Nicolas, when you guys look at the world from this moment onwards until the next 12 to 18 months, let's say end of 2019, is there a talk of the pressures because of the trade war or the taper or the tightening or a mixture of all of this morphing into a recessionary phase for a large portion of the world, or that's not in the realms of possibility right now?
No, of course. I mean, we haven't had a recession in 9 years globally. So after at some time, you start saying, when is it coming? Yeah. And one thing that I can predict with great accuracy is that we will have another recession at some point. So the question is, how soon will that happen? Yeah. And right now, a lot of the indicators seem to be fine. However, the sentiment is the one that we have to look at. We have to be very careful about the appetite of investors. And all these things don't contribute. Now, I must say that trade, just to put one thing into perspective, my view is that we really need to look at trade, holistically, and we need to reset some of the relationships. What happened essentially is that China grew very fast. It's a very large economy, very large country. The U.S., probably has some valid claims. At the same time, China says, I need to develop. I need to be able to develop. There are certain things I need to do. So what we need to have is a real dialogue in between both parties, resetting the current environment and saying, what are we going to do from now on? How is this relationship going to work? And it's obviously a very important relationship between a superpower and a very large economy.
So back in 2017, Nicolas, I remember your comments that there was a lot of intra-Asia activity that was being seen. Now, as a result, now how has 2018 been, firstly? And as a result of these salvos being fired, China has fired in a meaningful way its first salvo as well. If this actually escalates, then does that threaten to derail any uptick in intra-Asia activity or the activity happening across the world? Because we are seemingly entering into a bit of a protectionist regime across many economies.
Yeah. So we've seen surprisingly a lot of activity that's coming from Japan into around all of Asia. So Japanese corporations are becoming more interested in what's going on and trying to leverage that growth. At the same time, from China, what happened is with a lot of the regulations around CFIUS and just concerns potentially from counterparties in dealing with a Chinese party, they've also turned their sights into the rest of Asia. So what we're seeing is intra-Asia activity continues to be healthy, lots of dialogue with clients around doing things in Asia. So I actually feel just as optimistic around intra-Asia activity. Over time, we'll have to see how all these developments evolve. I mean, you've seen some news this morning around North Korea potentially decreasing, allowing certain bases to be inspected and dismantled and things like that. So that's also going to help positively in terms of some of the risks that are around Asia. But net, the conditions are actually fairly good. Asia continues doing well, so there should be more interaction between companies.
Interesting. You started all this interaction talking about the headline GDP growth number in India, 8.2. Now, what happens? I mean, when clients who want to make investments into Asian economies or emerging market economies, when they see that headline number, and I'm guessing when the conversations come around whether India will be the fastest growing economy at the end of this fiscal or the calendar as the case may be, does that by itself draw investing attention into India in a meaningful way? Are you seeing signs of that within your bank and your clients?
Yes, I mean, there's clearly, it raises attention. The fact that there's a number out there over 8%, and what's more important is with inflation relatively under control, within the 4 to 5% range. So clearly people are noticing that. I think what's happening in India is together with all the structural reforms that are taking place, there's also a wave of efficiency, technology that is hitting the economy through different market participants. And this is more related to new technology companies, new economy. And when we have all of our macroeconomic models and all that, sometimes we don't take into account all those efficiencies, and we tend to overestimate inflation or the impact of inflation, and we tend to underestimate growth. So, I mean, if we look at the last few years, and especially when you come here to India, the business community and investor community tend to be fairly conservative. And they tend to say, things are pretty difficult locally. I mean, it's going to be hard, it's going to be tough. But the reality is then the numbers end up working out pretty well.
You think that's because they are just conservative by nature, or are they underestimating the power of growth?
Well, I think there are issues around, like, the economy becoming more efficient, new sectors that are emerging that were not easy to track in the past. So all this is creating an environment whereby investors or economists, more than investors, tend to, underperform in a way.
Okay. My last couple of questions, Nicolas. And so one is that when this headline number comes about, it raises attention. Yeah. Over the last 9 months, has that attention materially translated into conversations around investing in a meaningful way into India? I know, on the equity side, by and large, it's happening. The net negative number from FIs this year, thus far, is not that bad into India compared to a couple of other, some of the large other EMs. But what about direct investment, non-equity investment? How are you seeing that?
Absolutely. I mean, I see that. I mean, you just look at some of the things that have been done in India over the past 6-8 months. I mean, a company like Walmart that is coming here and investing in a company like Flipkart with such a significant transaction. We're talking about a valuation of $16 billion. That's very, very significant. So that's a vote of confidence in the country. I mean, you see companies like UPL going externally and buying, Arista for like over $4 billion. Yeah. Those are very significant moves that we are seeing two ways, both from companies internationally coming into the country and then Indian companies starting to say, hey, I have sufficient critical mass, I can play a role globally, and I want to be a multinational as well. Okay.
My final question, Nicolas, and that is, do you think a troika of higher crude prices, a stronger dollar vis-a-vis EMs by and large, but the Indian rupee as well, and the fact that India does have a twin deficit problem, more so on the current account side. So while it has a bigger bearing on investing, all of these factors, but does it, and the fact that we are entering a busy election season for India individually, 3 state or 4 state elections coming up the end of this calendar, and May 19 is the national election. does that make investors wary about putting in fresh money to work and make them feel that let's wait for a quarter or two, let's see how things shape up and then go out and put fresh money to work? Is that happening at all?
Yes. Of course, it has played a role in terms of investors being a bit more cautious around India. And if you look at some of the devaluation, I mean, that may have been caused by investors reallocating their portfolio perhaps away from some domestic bonds, and that realized in the devaluation that we've seen. But I still think that we need to focus on the long term. The reality is, I mean, there's been a devaluation. People need to seem to focus a lot around the dollar, but if you look at it around other currencies, it hasn't been that significant. I mean, versus other emerging market currency and other global currencies. So the dollar has been very, very strong, and the government clearly is aware of the twin deficits, aware of the situation, and they'll need to manage it and do a balancing act, and so far it has proven quite well.
Okay, let's hope the optimism rubs off on all our viewers as well.
Great.
But Nicolas, pleasure chatting with you. Thank you so much for
Great.
joining in today.
Okay.
Viewers, thanks for tuning into this broadcast. Filippo Gori, Head of Sales and Marketing for Markets and Investor Services at JPMorgan Asia Pacific, with me on the show. Filippo, good morning and thank you so much for being here.
Niraj, thank you for having me.
Yeah, pleasure. So what's the central message that you guys hope to drive home via this conference? Because it's happening right at the fulcrum of what is on everybody's mind, which is the trade war, which is right now center stage, and the fact that the dollar, US dollar, is trending in a meaningful way versus the EM currencies. Those are arguably the two most talked points. Add to that crude and Saudi Arabia being comfortable northwards of 80, and you have a potent cocktail.
So I think it's a pivotal time for us to have the conference here in Delhi. I think it reinforces our view that India as a country is an important country for our investors and for the globe in general. It's a country that can sustain better than others also possibly some of the falls from the trade war, and in general we remain super positive on the country given the demographics and the technology and the digitalization that is happening, and therefore the high attendance that we're having this year again, I think it's an indication of how global investors are looking again positively at India.
Are you guys in fact taking out that message? Because back home, when we speak to domestic investors who are getting a clutch of money to invest into, they are all citing one issue, and that is, or rather two issues. One is the valuations, and boy, India has had a good year thus far, and the twin deficits that might threaten or derail the party.
So on the valuations, we remain positive. We still think that in 2019 the overall earnings will grow for India at around 15%, which is still a very good number that should be attractive for investors. We believe that the monetization and the impact of GST that was in people's mind in the past few years is probably fading away, and therefore we still believe that is attractive from an investment point of view. Clearly, the currency is something that is on the back of people's mind. India has fared better than most of the current account deficit EM countries, probably until August. In August, they suffered a 5% drop in the currency, which it was kind of expected. And where we go from here, I think it's on the back of people's mind. I think investors could be concerned because next year is election year, so they will be watching out for profligacy from a fiscal standpoint, and therefore our message is probably that fiscal orthodoxy is probably what is required to keep investors interested in India in the foreseeable future.
Interesting. Filippo, how does India do when the world is doing what it is doing, and the US economy is doing rather well?
Exactly.
Europe, well, neither here nor there, so to say, if I can quote the Bill Bryson book. So what happens in such a global scenario? Because 2017 was all about the global GDP growth moving up in a coordinated fashion. 2018 has been anything but that. It's
decoupling. It's the history. It's the story of decoupling. US is growing. The rate cycle is, in our opinion, is set to stay. We believe there are going to be other 2 hikes between now and year end. by the way, we have the same view for India. Europe is dealing with a problem on the periphery. Southern Europe, my country of origin, Italy, for instance, is going through tough times. Brexit is a known unknown. It's known that it's going to happen, but is unknown in the level of the quantum of what we will be facing. And EM in general, you have the current account deficit countries that are suffering, as you would have expected in a raising rate scenario, and the trade war. So these are, I think, are some of the topics on the back of people's mind. And on the trade war, we feel it's a kind of lose-lose for both parties involved.
China has retaliated as well, as we know.
As expected.
Yeah. So how big a problem could it be for world markets?
I think at this point in time, if you look at even at the indices overnight after the announcement, that they didn't really suffer that much. I think it's on the back of people's mind is either it's incredible optimism or there's the belief that some sort of agreement will be reached. Some of these retaliatory measures are only kick-starting next year, so there is time to find an agreement. But we are getting closer to some sort of cliff edge scenario. So far, the amount of our estimate of the amount of U.S. measures against China will have an impact on GDP, but so far we think it's something like 0.7% of GDP. It's not dramatic, but it is escalating very quickly.
So do you agree with the investors, or do you believe that there should be some caution being given to this trade war rhetoric, which until now was only a rhetoric, but now we are firmly seeing steps being taken by both the nations?
I mean, by nature, I'm a little bit more of a conservative guy, so I tend to look at things with a more degree of conservatism. I'm still hopeful, though, that a solution will be found because it's in the best interest of everybody.
Interesting. The other big concern is crude, Filippo, especially for a country like India. I mean, somebody was making this point that India is almost an FMCG space when crude is benign, but when crude rears its ugly head, that's when the problems for India begin.
And it's clear, India has benefited over the years from this sort of natural hedge, some people call it, when the dollar is strong, the rupee is weaker, you tend to have normally a lower oil prices. And right now that hedge is not working out, and therefore India has been battered by both sides, high oil prices and a strong dollar, which has an impact on the economy.
So then from a market's perspective, Filippo, what drives the optimism? We don't have valuations on our side. There are these twin deficit problems. Both the currency and crude are not working in favor of India. The only thing that seems to be working right now is a relatively better fiscal situation and the fact that earnings might make a bit of a comeback. Will that be enough to...
I think you have other things in your favor. FX reserves are 400 billion, is still considered a healthy cushion. The demographics, as I said, are in your favor. To a certain extent, you could probably be isolated from some of the trade wars dynamics. And in general, funding the current account deficit is not a problem for the country. We believe, we have a feeling that we think there could be 2 hikes coming from a rate standpoint, one in October and possibly one in December, and maybe the government could take some measures to defend the currency between inter-meetings. Probably something that's on the back of people's mind at the moment is if there is an encroached view that the rupee will weaken further, it could become a little bit of negative spiral, a self-fulfilling prophecy. So we believe that the government will probably try to defend the currency hard. But in general, even a 3% current account deficit is sustainable as long as there is fiscal orthodoxy.
Okay, interesting. Just last couple of questions,
Sure.
Filippo. Firstly, how does India therefore stack up vis-a-vis some of the other economies that you may be watching from where you are perched at? Do we score very favorably on a lot of those counts?
Yes, of course.
And therefore, does it therefore lead to investors being a lot more sanguine about India prospects in a global uncertainty?
I believe so. I mean, India at the moment is not, for instance, from a bond standpoint, is not on some of the M indices, and therefore at times flows from investors that can be a little bit fickle and not sticky. But overall, we still believe that it's an important opportunity for investors, especially at this level of currency. So we think it stacks better against some of the other, Argentina, Turkey, South Africa, or Brazil in that case.
Interesting. One of your peers from another brokerage was telling me that the problem for him is that when he talks to his set of investors globally, they say that yes, we agree that India is a great economy and a great country and a great earnings story. Yeah. But look at the rally and look at the fact that because of the domestic money out there, the valuations are not coming off, and therefore, even though we like, the prospects, the valuations are just so punchy that we're waiting for a correction which is not coming.
On the equity side, definitely the domestics have kept the valuation higher. On the overall, on the fixed income side, I think bonds are actually still attractive. So some of the Masala bonds that you have out there are interesting for foreign investors.
Interesting. There are some, of course, norms that have been revised as well for investments from the government, which might probably attract attention too.
Yeah, reduction on the caps of single name investments and so on.
Yeah, I remember last conference, at this time around, in the JPMorgan conference, those limits were getting exhausted, and the feeling was that when do they start again? You believe there could be interest into the Indian bond market as a result of the measures that have been taken?
I think if the currency stabilized, then the bond market will come back to be interesting.
Okay, so the final two questions, and which is why, since we brought the currency in, for a long time the Indian rupee was resilient vis-a-vis the dollar. Yeah. I think this year maybe a few people have gotten unnerved, but I think as Sajid, your colleague, the India economist, has said that this was par for the course and there is no need to press any alarm button.
I agree.
Would you believe?
I mean, look at the last quarter. You had the best ever growth in the Q2 of this year compared to the previous 9 quarters, and we still believe that next year you probably will have record GDP growth at around 7.3%, which will make you the fastest growing economy in the world.
So does that give a bit of a cushion to the rupee, or do you believe there could be
it does. I go back to the concept of orthodoxy, because it's something which I believe is on the back of investors' mind. In an election year, they don't want to see a fiscal cliff edge, let's put it like that.
Okay, my last question, Filippo, and that is, if the US economy is growing so well, and if we have the taper being more pronounced in the last quarter of the current calendar, and earnings growth in the US also showing up very, very well, would there be a natural flow of money into the mother market and some of the other well-performing developed markets as opposed to EMs? Do you see that playing out over the next 12 months or not quite?
I think there could be a trend there for some. Definitely you saw some EM disinvestment happening over the last 2 to 3 months, and you saw the countries that suffered that the most. Whether it's a whole trend or whether it was just affecting some specific country which have also some geopolitical problems, I think it has to be seen. It's a bit too early to call now.
Well, I hope investors feed off from the optimism that you have on the country, Filippo. Boy, we need that. But thank you so much for joining me today.
Thank you very much.
And speaking to us.
Thank you very much. Thank you.